So here we have a list of every potential catalyst in 2022 for Tesla. We're going to break down each one individually, and we'll conclude with where I think Tesla could end up towards the end of the year. The first and most imminent catalyst is the Giga Texas launch. Yesterday, 107 production Tesla Model Ys were spotted at the Giga Texas factory. There's a chance we may get a few Model Y deliveries in Q1, but things look set to start rolling at the beginning of Q2. While the opening of Giga Texas is probably already baked into the stock price, it will certainly create some positive momentum for Tesla and probably create some positive PR from the president, who finally acknowledged Tesla last week. The next catalyst is the 4680 cell being scaled in production. With any new technology, there's always the potential of setbacks. Thus, smooth sailing with the 4680 will definitely be a positive catalyst for Tesla. Sawyer Mayer on Twitter has been reporting some very promising signals of success, and in fact, the first few Model Ys out of Texas will in fact contain 4680s. Not only do the 4680 cells come in with better performance, but they also are half the cost to make. This is only going to continue to increase Tesla's margins as they've been doing year over year, and I think the true effects of this catalyst will come after maybe the Q2 or Q3 earnings reports, when we start to see those margins reflect the change to 4680s. And now the catalyst none of us want to talk about, Giga Berlin. We've been talking about this factory opening for over a year now, and the whole process has just been incredibly slow. It's been painful. And this catalyst has huge implications. I mean, we're talking about 500,000 vehicles in annual capacity. Imagine not getting that if Berlin didn't open. At $10,000 in profit per vehicle right now, that's a $5 billion profit sway. And if we gave Berlin, say, a 40 PE, then we're talking about a potential swing in about $200 billion in market cap. I think we can justify giving Berlin a 40 PE, not because they're going to grow production at a rate that warrants that PE, but because the software revenues that they get from those 500,000 vehicles do. So yeah, we really are looking at a $200 billion swing in Tesla stock depending on whether or not Giga Berlin opens. And I'd argue probably more than 200 billion, because once Tesla is implanted in Berlin, they can expand the building's grow capacity easier than it takes to find a new location, build a brand new building, and go through a whole nother bureaucracy. So you could probably give it an even higher PE than 40, and we're talking even more, but it's a huge catalyst. Nonetheless, it looks like we're not going to see Berlin until mid-March at the earliest. Concerns of the Germans are that Tesla has been repeatedly changing their estimations of toxic chemicals and something to do with the way they manage the waste of water. But we all know that Tesla is one of the most ethical companies out there, and safety has always been their #1 priority, so I have no doubt that Tesla is going to meet the safety requirements of the Germans. The next catalyst for Tesla is receiving an investment-grade credit boost from the S&P. As it stands, Tesla is currently rated as a BB+ stock, which still implies a degree of speculation associated with the stock. Many analysts are anticipating an upgrade for Tesla, as their debt is now down to $1.6 billion and they have cash of $20 billion on reserves, with plenty of cash flow incoming. Tesla has proven to sell every car they could possibly make in a very profitable way. There is virtually no risk of failure left. It's only been roughly a year since Tesla became profitable, and lots of investors still don't even know about it. It's proven to take time for Tesla to grow out of its risky image, and this credit upgrade is going to help massively. It will enable a lot of money managers to finally buy the stock, and we're going to see a big run when this happens. If there is a 2022 catalyst that I would say is guaranteed, I would say it's Giga Shanghai expansion. Giga Shanghai has been so successful and so profitable. They seem to have a great relationship over there, and it's going to help Tesla eclipse 1.7 to 1.8 million vehicles delivered this year, shocking Wall Street once again. So next on the list is Tesla Energy, and I think Tesla Energy is the dark horse catalyst. Their growth in energy storage deployment has been limited by supply, but they still grew the segment by 32% last year. Their solar roof deployment nearly tripled, and while they have been breaking even on these segments over the last couple of years, they advise that they are starting to focus on making these segments profitable now that they've scaled them. To address the growing demand for energy, Tesla is building out a mega factory battery plant in California. The factory will produce a new 40 gigawatt-hour megapack system used for utilities. 40 gigawatt hours is tremendous capacity, far exceeding what Tesla can produce now. Over the past 12 months, the company has deployed only 4.6 gigawatt hours of energy storage systems, including Powerwalls, Power Packs, and Megapacks. Tesla also recently got approved to sell power. Yes, power. Not storage, not solar panels, but power to households in Texas. Elon said on a conference call back in 2020 that he thinks that Tesla Energy will eventually become as big as Tesla Automotive. We are starting to see some real steps in this direction, and if they start backing up their scale with profits on quarterly reports this year, Tesla stock is going to run it up. It's funny that in our world a stock split is considered to be a catalyst for a stock. Well, That's the reality. The last time Tesla stock split, the stock rose 81% on the news. Since the price to buy the stock becomes cheaper, more people can afford it. There's a lot of noob investors in the markets right now, and so stock splits have a big effect. I think stock splits help for experienced investors as well, though, because if a stock costs $100, then more often I'm going to find the spare money to be able to buy the stock. Whereas right now, when it costs $1,000, I might be able to only do it once a month based on my income and moving money around. While FSD Wide Release is listed as a catalyst, I'm not sure the stock would be negatively affected if it didn't happen this year. Currently, Tesla has an average price target on Wall Street of $1,100 without any analysts factoring in the potential of FSD. Adam Jonas at Morgan Stanley, for example, made sure to explicitly note that his price target had nothing to do with FSD. This all being said, Elon Musk, one of the greatest engineers of our time, said this year that he would be shocked if it was not solved this year. And while Elon has said this before and it didn't happen, when it does, it is going to be the biggest catalyst of all time. I think in many ways, though, the wide release of FSD is already happening. We have 60,000 beta testers in the US, and FSD finally just expanded to Canada. I'm from Canada and I'm extremely excited. I'm trying to get my hands on a Tesla because I think that these things are going to continue to increase in value. I'm not talking about the stocks, I'm talking about the vehicle, the price of FSD. I want my hands on one. I want it for making content. It's just be so fun. Every time I see a Tesla on the roads, I go up to the driver and I ask them if they have FSD beta and if they'll give me a ride. I'm like, dude, I'll pay you $20. I've yet to drive with FSD beta and I just want to be in the car. Oh, that'd be so fun. So if you're there and you want to give me a ride, hook me up. Anyway, 60,000 beta testers, FSD is coming to Canada. I think the wide release is being slowly implemented. It's not going to be some big thing. Sure, regulations might interject at some point, but Tesla is rolling this thing out, man. Right now, I think they're giving it to people with a safety score of 98, but next will be 97, 96. More and more people are going to start taking it. I am extremely excited to see FSD beta version 11 with the single stack neural nets. I think it's going to be a huge improvement. I want to do a video just describing this technology and learning about it. It would be great for me too. I'm sure many of you saw that CNBC article about the beta testers using FSD beta with the journalists in the car, and they documented the whole thing. It was very biased, and they really were like predicating on the nuisances of FSD, and they're trying to innovate. Tesla is, and it's like some seriously cool stuff. And so for them to be so like bitter about it on the article, it's just not cool. It's like, it's a really cool thing what Tesla's trying to do. You don't gotta shit on it like that. And I think what would be a positive catalyst for Tesla is to hire a PR team to kind of fight back on these types of videos, make some content themselves, put it out there. They don't have to have a PR team. They can just make some YouTube videos. I think that would be a positive catalyst for Tesla stock because you could fight back on the brand equity and building out your value as a company and as a image, and I think that's important. I know Tesla prides themselves on just being a company that focuses on their products. They let their products do the talking, but sometimes you just get shit all over, and the people that are more negligent, they don't ever get to try the product. The people that are going to be regulating FSD, they're not allowed to be seen in a Tesla. Biden, if he ever was seen in a Tesla, it'd be over. So the only way to educate him is to create content. And I only said it'd be over if he was seen in a Tesla because he's in bed with the unions like General Motors. Anyways, back to the catalyst, Tesla Dojo. Tesla Dojo is a neural net chip with immense computing power. The goal of Dojo is to bring down the cost of computing so that they can more efficiently train their neural nets that carry out AI and FSD. The reason this is an important catalyst is because of the computing power required to make something operate at a more functional level than a human. As Tesla continues to train their neural nets to drive better than a human, the neural nets require more compute. Thus, the Dojo project is a good sign that Tesla believes in the scale of their AI businesses, as they are anticipating that the neural nets are going to continue to learn, in which case Tesla will begin to depend on something as great as Dojo. Therefore, the Dojo launch in the second half of 2022 could hasten the training of neural nets, thereby increasing the performance of FSD, all while increasing the profit margins on software revenues. So this is a big catalyst, and I'm very excited to follow the progress in this area. If you guys want to learn more about AI at Tesla, I recommend any interview between Dave Lee and James Downlow. I've really enjoyed those. Tesla Herbert added a catalyst here called Supercharging Hotel Chains. This seems a bit speculative, but I think he's anticipating a partnership with a national hotel chain in which superchargers are installed at a bunch of the chain's hotels. So it'd definitely be convenient, but I'm failing to see how this would impact the stock. Superchargers grew by about 36% last year, and judging off reports by Sawyer Merritt, are growing even faster this year to keep up with vehicle production, which is growing at 50%. Instead of a hotel chain, I'd love to see Tesla come up with a restaurant, or maybe partner with another restaurant that pops up at various supercharger locations for Tesla drivers to get a bite to eat while they wait for their car to charge. Whatever it is, I think that the supercharger business is extremely underrated as we go into the future. Tesla is one of the only EV companies who have already built out their infrastructure. They've got up the best locations, and now they're opening up superchargers to other EVs, making a lot of profit. All this to say, the best thing about superchargers, in my opinion, is that it complements the entertainment side of the business. If you have a Tesla and you're forced to wait 20 minutes for your car to charge, what else are you going to do but subscribe to premium connectivity in Tesla, buy their entertainment packages, and chill while you wait for your car to drive? Tesla's going to be making money from the charging, and they're going to be making money while you're playing a game waiting. All this to say, Tesla just needs to keep building superchargers at a rate that coincides with their vehicle production, avoid the long wait times, and everybody's happy. I am so excited about the Tesla Semi. According to Sawyer Merritt, the owner could save $400,000 in fuel costs, assuming a price per kilowatt hour of 24 cents. Multiply those savings for a fleet, and you can partly see why the Tesla Semi is such a disruptor. And now when you add FSD, the savings get even more spicy if you're a business owner. When you hire a trucker and send him across the country, you've got to pay for the labor and the gas. A Tesla Semi with FSD removes both of these costs, and all you need are employees at the destinations to unload the trucks. And by employees, I mean Optimus robots. Of course, this is a long ways away, and it's likely an employee will travel with the Semi to oversee the software and to oversee the cargo. Even if this is the case, think about the quality of life of the employee. No longer does he have to focus on the road for like 10 hours a day, but he can chill back, he can start his own business, he can look at the clouds. It's gonna make the employee happier, and it's also gonna make the employer happy because his employees are gonna be happy. It's a happy cycle. If Pepsi receives their orders of Tesla Semis soon and they report positive feedback to the public, Tesla stock is gonna be happy too. The next catalyst is new Gigafactories being announced towards the end of the year. Any announcement, doesn't matter the location, it doesn't matter if it's 1 or 2 factories, will have a positive influence on Tesla stock because these Gigafactories have proven to be highly profitable. As long as it's not in Berlin, we're okay. This announcement would reinforce the 50% annual growth target that Tesla has set for itself, and this event would be preceded by Wall Street analysts increasing their earnings estimates, which always positively impacts Tesla stock. Licensing with one legacy OEM is Tesla Herbert's next catalyst. This catalyst probably assumes the wide release of FSD and that Tesla will license the software to other companies to use. I don't really see what else it could mean, as Tesla licensing their electric skateboard just doesn't really make any sense because then they're foregoing software profit. It could mean licensing Dojo technology to other companies after they successfully prove that FSD was successful. And that would definitely be a good catalyst, as people would have to pay a lot of money to acquire Dojo technology to ramp their own versions of FSD. Elon Musk has said many times in the past that he's open to licensing software technology, so I'm very curious to see if this happens this year, but I think it will happen at some point. There's been a lot of talk lately of an app store launch in Tesla vehicles, and I think this would be a positive catalyst for the stock, and it would increase entertainment revenues. I think we'd see some very creative apps from developers, and they would definitely find ways to improve the experience of the Tesla driver. Tesla has already incorporated loads of fun features that drivers love to show their passengers, but I think an app store would only increase the arsenal of little gadgets that Tesla drivers can use to kind of bring more people into the cult and bring more people in who fall in love with the product. The Tesla bot demo. This is the most highly anticipated demo since the iPhone. Tesla has expressed that the Optimus bot is basically an extension of FSD. They can take that same software that they use to help the car maneuver the world to help the robot maneuver the world. While this is easy to understand, what I'm curious to see at the demo is whether or not they can make the robot balance. While they have shown to use FSD to help a car maneuver the world, a car doesn't need to balance. Not only will the bot need to maneuver the world, but it will also need to walk, bend over, pick things up, lots of different actions. As humans, it takes us a while to learn how to balance. Your muscles need to remember certain movements. So I don't know, I'm just fascinated to see if Tesla can make robots balance and do all these different tasks. It's like a big undertaking. It's funny, I have no doubt Tesla's going to be able to manufacture these bots for cheap. The Tesla bots is going to be able to see the world and use video labeling and neural nets to take things in and somewhat understand them and be able to communicate with me. I have no doubts about that, but it's balance. How are they going to do balance? Just think about it. That, it's a whole gravity field when you're on balance. It's crazy. So that to me is the most challenging. I'm very curious to see the Tesla bot kind of walk on stage at the demo, and I'm going to be watching him pick up a box. I want to see you pick up a box, and flex your, whatever you don't have anything to flex. It's all chains and shit. But anyways, I have no doubt that they're going to be able to manufacture these bots for cheap because a bot is going to have a lot less parts than a car. And Tesla's manufacturing prowess is extremely proven. We know that artificial intelligence and manufacturing are strengths of Tesla. So show me balance and I'm all in on the Tesla bot. Of course, a Tesla bot that can perform labor has the potential to literally upend the economy, redefine it, recalibrate all of our thinking. So of course, the stock would be broken if this became a catalyst, a real catalyst, a reality. Final catalyst is ride sharing towards the end of 2022. Again, this assumes the wide release of FSD, and it involves Tesla starting its own platform for ride hailing, such as Uber. I think it's possible that this could happen this year, possibly with a driver still in the car watching over the system as it is still in its infancy. Even if this wasn't profitable at all, which it will be, this would be a positive catalyst for the stock as investors would start to see the dream come to life. This dream being Tesla fleets out there on the streets driving people around with no driver at all. This would generate recurring profits for Tesla for every vehicle they sell from now until the end of time. For investors, we never have to worry about demand again. For people that use transit, their cost per mile goes from like $2 to 50 cents a mile. This is because Tesla doesn't have to pay for gas, they don't have to pay for a driver, so the cost for transit drops dramatically. If we even get a glimmer of this reality in the short term, Tesla stock is going to skyrocket because it will blow past its PE of 175, outgrow it like, I can't even think of a metaphor for how fast Tesla stock will rise if we start to see robotaxis become a near-term reality. Having explored all these catalysts, taking them all into consideration inside my long head, I think Tesla will triple in 2022. Tesla's PE based on Gary Black's 2023 EPS is now down to 43. This is way too low based on their product roadmap and the growth to come. Once the fallout of this macroeconomic environment withers away and some of these catalysts come to fruition, there's only going to be one way for Tesla to go. I'll let you guys think about which way that is. Thank you guys for watching my video, and a big shout out to Tesla Herbert for making this catalyst list. I briefly covered basically every topic in Tesla in this video, so if you guys want me to focus on one more in depth in a video, please let me know in the comments. These videos take a long time to make, so please leave a like on the video to support me. If you check out my channel, you can see that I'm posting a ton of videos very frequently, and I'm here to stay, so subscribe to the channel for more content. Thanks.